Economists predict that the Federal Reserve is forced to cut interest rates several times by the end of this year. This would be the first time they cut interest rates in more than 4 years, and it would signal the beginning of a new era in the stock market. And there is one investor whose portfolio does really well when interest rates are low. And today you will see what are the top stocks Cathie Wood owns and what massive prediction she has for the stock market.
Broad-based innovation has underperformed significantly. We have miles to make up. And believe me, we know it, and we believe we will.
Interest rates have been at a record high for more than 2 years. And so far, the economy kept growing. The US unemployment rate is one of the lowest in the developed countries, while wages kept growing. But new economic data shows that underneath the strong performance of the economy, things might be getting seriously bad.
We have 18 strategists running all of our services. Every single one of us now believes there's a recession.
For instance, the SAM rule, which tracks unemployment in the last 12 months, just hit a level that signals a recession. Since 1970, the SAM rule has coincided with every recession without failure. And right now, if a recession happens, it is because the interest rates are very high. Because the thing about interest rates is that decisions the Fed takes now have a lag of a couple of months. As a result, people fear that Fed might lower interest rates when it's already too late.
If you look at the last 12 tightening cycles, we've had 8 recessions. It's a hard thing for the Fed to pull off.
This was evident from the reaction of the stock market on August 5th, when the volatility index hit 65. The index hasn't been so high since March 2020.
People are fearful. If you look at National Federation of Independent Business sentiment, the sentiment is as low as it was in 08-09.
As a result, many experts now predict lower interest rates. But in the midst of this panic, on the long term, the stock market might actually benefit from lower interest rates. And while the benefits will be different for different types of assets, there is one investor that did her best work when interest rates were low.
We think now that there's a real reason for this innovation to take off even more.
Cathie Wood argues that we are now already in a recession. It is just not a full-out recession, as the weakness can only be felt in a few industries.
As soon as the Fed started raising rates, housing effectively went into a recession. Commercial real estate office was already in a recession. We've had a rolling recession, and now we seem to be in the all-at-once phase.
Moreover, she believes that as a result, unemployment will rise even more.
So I do think the unemployment rate is going to go up.
Considering both the economic weakness and the higher unemployment rate, Cathie predicts that the Fed will be forced to cut interest rates on their meeting on September 17.
If we're right, it will be much clearer that they need to cut in September.
Lastly, Cathie believes that we might be towards the end of this roaring recession and the economy will recover as long as interest rates are lowered.
I think inventories and consumer spending will be very soft, but that's the end of the recession. We're not looking into the beginning of a recession, and that's why we are positive.
In this context, where does this leave the stock market? Could it crumble before interest rates are lowered? While obviously anything can happen, Cathie Wood has a positive outlook.
We could be in for one heck of a bull market, and you know why? There is so much cash on the sidelines. So much cash on the sidelines that has to be put to work.
So now let's look together at the stocks Cathie Wood is buying. The first thing that Cathie bought in the second quarter was healthcare stocks. She increased her position in several biotechnology companies like Recursion Pharmaceuticals, 10x Genomics, and Intellia Therapeutics. But be aware that biotechnology stocks are very cyclical. The ARK-G fund that tracks genomics companies is exactly where it was 9 years ago, so genomics stocks are very unpredictable and high risk. She also increased her position in several software companies like PagerDuty, Palantir, or Roblox. Cathie believes that in this AI world, companies that help other companies be more productive will succeed, so that's where Palantir fits in.
Generative AI companies that are able to sell their effective software into companies who are going to increase their productivity, they're going to be willing to pay 10% of that increased productivity to those companies.
Palantir is now the 9th biggest holding in Cathie's portfolio with a weight of 2.9%, sitting slightly above the 10th position, Shopify. And on the 8th position is another AI company, UiPath. However, this stock has underperformed severely since the CEO abruptly left the company in May, and now it is a high-risk, high-reward stock. On the 7th position, Cathie has another biotechnology company, CRISPR Therapeutics, while on the 6th position she has Robinhood. She sold 26% of her Robinhood position after the stock rallied a phenomenal 59%. But Robinhood stock might still have upside potential as it just got upgraded by Wall Street analysts. And speaking of stocks that are loved by Wall Street, on the 5th position is one of the most disappointing IPOs in recent history. It still sits 36% below its IPO price from 3 years ago, and Roblox stock has been on a rough patch. However, Cathie increased her position 13% as Roblox hit a new record of daily users. The 4th position in Cathie's portfolio is Block. The company posted solid results for the second quarter, but the stock is still struggling as it had a negative return of 10% in 2024. The 3rd position is another platform play that Cathie Wood loves. She increased her position 10% in the advertising player Roku. However, the advertising industry is one of the most volatile as Roku stock is now 33% down year to date. So this is clearly another example of a high-risk, high-reward stock. And so is the 2nd position. However, this is one of the most beloved stocks by Cathie. The only reason why she sold 19% of this stock is because it did too well and now she took some profits. The stock is Coinbase, and this is an indirect bet on the growth of the crypto market. However, the company had a bad second quarter as the stock dropped 23% from its recent highs. Cathie wasted no time and she started buying more Coinbase stock as she is a firm believer in the crypto market.
As we've said many times, we think we're just at the beginning of the Bitcoin story.
She even has her own price targets, which might be ridiculous for some people, but she is very bullish on Bitcoin.
We are more convinced now that our bull case of 1.5 million by 2030 is the more likely case.
Lastly, Cathie Wood's #1 holding is her favorite stock, the company that has an immense advantage in terms of data, and it will probably become the first company to achieve full self-driving.
What has to happen is an autonomous taxi platform. Instead of selling a car and maybe the software package, and that's it, this becomes a recurring revenue model.
Cathie attributes much of the success of Tesla to its superstar CEO.
He's a maestro of the convergence among technologies that is taking place. Most people, when they think of a company like Tesla, they think of autos.
Sure.
He wasn't thinking that way at all.
Now, after looking at what Cathie bought, I need to emphasize what she warned us to stay away from. Because in this rolling recession, she argues that companies with a lot of debt on their balance sheets present a very high risk.
Any company that is highly leveraged and doesn't understand that prices are going to be falling is going to be in trouble, because falling prices means it will be very hard to service that debt.
Lastly, I cannot end this video without reminding you that Cathie Wood's picks are mostly high risk. Please keep in mind that her ETFs are all underperforming the S&P 500.
We should be a small allocation. And understand,
this is going to be a very volatile part of your portfolio. We're the closest to a venture capital fund in the public markets.
If you feel like you've learned anything of value or you want to see more videos like this one, please hit that like button and subscribe.